right, good morning, everybody. Saturday sweet webinars here with Lucci and Jesus. Today we're going to go through a couple quick examples on some steam that hits the room, as well as the private Twitter feed. And you guys are obviously trying to figure out whether you want to play stock or whether you want to play some option. Okay, now most of us are options traders. Jesus right now is currently just trading the equity, just trades the equity off some of the steam that hits. But a lot of us want to play the options. You have questions on which option to play. Should I follow the steam that hits on the private Twitter? Should I follow the steam that hits with the monthly options that come in, or maybe should I play a little bit of a weekly, to play the initial steam? So these are all questions that you need to have answered extremely quickly. We're talking about within seconds to minutes. Once that order hits, you want to be able to figure it out pretty quickly. So here are some good tips and tricks to figuring out which names are okay to follow on the options, and which names you should probably stay the hell away from the options with, depending on your level of trading ability as well. So, Jesus, what's going on, man? Good morning. How are you?
Good morning. How's everybody? Thank you for coming. And exactly on Lucci's points. I mean, I'm going to start off this webinar a little bit about how this is unlike everything else you're probably used to seeing out there in regards to trading unusual activity or scanners per se, and just tailing that particular order, and then go a little bit in depth on my mindset, and maybe have Lucci chime in and elaborate a little bit further about liquidity and when it's the right time to focus on the option rather than the common. So
nice. All right. So before we get into that, guys, we're going to launch. We obviously have a promo just for the the people that are registered to this particular webinar. So just the people that did register for this webinar and for previous Saturdays, we do have a promo specially just for you guys. I will go ahead and post the link for you guys to access that promotion. All the questions that we have right now, we get a ton of questions in the beginning. Try to save your questions here for later in the webinar. We're going to do a little 10 minutes of Q&A. Where we can take all of your questions, any questions about discounts, all that kind of stuff. If you guys want to shoot the shit about the market in general, we'll take a couple questions there. But let's stay on task here, and let's go right into this. So we have a couple examples for you. First ones we want to get out of the way are some of the bigger names, aka the Netflix and the Win, which have been huge winners for obviously the Steam players, but also us in the chat room as well. So Jesus, let's roll right into this, man. Let's which one you want to do first here?
All right, cool. And then, again, I just want to drill the point home, and I know sometimes it comes across as a broken record, but this is a lot different approach than what you're familiar with, whether it's on Twitter or any other option service per se, where you're just tailing every single order that you screen or scan for, okay? I refer to it as Wiseguy activity for the reason that I'm looking for a specific type of aggressive reaction or behavior shown by the smart money quite often, okay, when they're expressing urgency or confidence behind a bet in the options market. And basically how that, the biggest differentiate between the two is that I'm looking for an immediate reaction, and that's why I focus on that aggressive nature. I'm looking for something that's going to show some type of impact in the markets over the extreme short term. And I'll show you a couple examples of what I mean by that. All right, and we're going to start off, like I said, with Netflix, as Lucci mentioned. And we saw some really interesting action that came into the sell-off, actually. And again, these guys have just shown the tendency to step in the market when everybody else is most afraid to. And that's how these guys make this money and have the confidence to put this type of dollar amount behind these bets. So this is on February 24th, okay? And you can see here on the alert, 9:59 in the morning, we saw here bullish. Okay, can you hear me? Everybody can hear me, right?
Yeah.
All right, so this week, Okay, we saw a huge sweep here of May 95 calls, 719,000 plus bet behind this order. Okay, it came at a little before 10 o'clock at $87.06. And you can see here we have the reference to usual volume. I don't strictly focus on that, but it gives you an idea of maybe the size or how unusual the order may be. And we saw, so they come here right around 10 o'clock, and the market was actually fading quite nicely there. There was some heavy selling, and they stepped in, and two big orders. One came at 10:12 as well, and that was a May 95 call, $675,000 bet. Right after that, again, a sweep, which shows aggressive, and that came a little bit higher at 87.45. So now, I want to put you in my shoes and what I'm looking at here. The market was in sell-off mode at the time, okay? So when I see a bullish bet stand out like this, the first thing I'm looking at is the name itself, okay? So I know Netflix is quite a liquid name, both as far as the underlying is concerned and the contract's concerned. So now my focus, okay, and the question I ask myself is this type of order significant enough to have an impact on the stock now? Okay, and a lot of that is looking at the strike price. You know, if we saw December here, I may actually hold back a bit because the guy's looking for a lot of time, and that might not fit parameters to go in and buy the stock or the option now. So, you know, the first thing I'm looking at is the liquidity. I'm looking at the strike and the date of the bet to get a gauge on the time frame. Okay, so at this particular time, this is a perfect example of you could have utilized anything. I mean, if you go into the market and you think this can provide momentum over the short term for that day, you don't necessarily have to buy the May 95 calls. Okay, you could, whatever risk you have, you know, everybody's got their own personal agenda. I mean, you could have bought monthlies, anything. Just knowing, excuse me, that this bet was significant enough to have an impact over the short term. All right, and we got a couple here so you could get an idea of the option liquidity and so forth. Where am I? There we go. Okay, and you can see right here is when they came in with those two orders. All right, and then you can see the instant reaction, I mean, throughout the course of the day, and Netflix went on to actually see some follow through as well.
Right, right. So this particular option that we're looking at, this is a May, you know, this is that same May 95 call. So now if we take it to the options here, you know, you have some choices. You obviously have some choices here. You can trail that particular order if you feel like you're in a market that's going to continue paying off the long side trades. And clearly this guy came in to dip by a strong name with, you know, further expiration. So clearly he wanted to swing this name and he wanted a dip, right? And he caught his dip. He caught his dip real well with a nice 1.2, 1.3 million bucks. And he pretty much doubled his option, and he's still holding this. I'm assuming he's still holding this. You know, we might still have some upside left. Another cool thing here is that you have some options with this. So notice that with this option in particular, with this May option, you can see how many actual transactions take place, right? There's a good enough amount of transactions that take place here that lets you know that you have a liquid option. And also, Jesus, can you go back to the chart for me?
Yep.
So when you go back to the chart and that actual steam, can you pull up that chart that you have?
Oh, okay. Yeah, a little bit. Hold on.
Yeah, it looks like it's right there.
Yep.
Right, so now guys, check out when the order hit, right? You can see the time. You can see it. It's at 10 o'clock. So that hit on the low. And Jesus was saying like, hey, you know, this looks like a pretty good option to tail simply because it's a May option. So it's not that far out in time. You got a close strike here because, again, Netflix can move very quickly. And now take a look at how liquid the stock is. Take a look at how liquid, take a look at how juicy the move is. You can even roll to weeklies on this option. So if you want to play initial steam on a name like this, instead of playing the stock like what Jesus is saying, you can do exactly, you can play the stock essentially with just a weekly option if you want a little bit more risk, because boom, I got a pretty liquid name here. I got a name that wants to move right now. So that means that there's plenty. It wouldn't be that risky here to hop in a weekly or to hop in, let's say, a front month expiration to play this same move. So you could have played this move, with a March option, with an April option, with some weeklies as well, if you want to juice your returns a little bit more, because you have a liquid name and you have a bullish market and you're adding all this stuff together. This is where the real advantage is when it comes to trading options, and you have a name like a Netflix. Jesus is going to roll out with a couple examples where, let's face it, like, these names are so illiquid that you can't play a weekly. You can't play these things like you would play a Netflix. So this is huge here as far as the different ways that you could trade this. So Jesus, this is a freaking perfect example here.
Yeah, and to elaborate on your point, Lucci, this is all stuff we speak about in the chat room every single day.
Absolutely.
Like when this Netflix order hit, once we saw that order, I elaborate a little bit about my analysis of the order. Lucci will chime in about the timing of the order and what the tape is looking like. So again, this may be something that's a little more difficult to do on your own without the commentary and analysis behind it, but this is all stuff we focus on every day in the chat room.
Right.
It's not just a scanner spitting out orders and you're making your own decisions. We'll elaborate on whether it's liquid enough, the timing of it, should you go out further in strike or dates and so forth. So today we just want to give you examples of times we focus on stock and times we can focus on both, per se. All right, and the Netflix is a perfect example of how you could have really focused on anything.
Yep.
Once I come to the conclusion that this was strong enough action to see a reaction now, and that's the most important thing, then, like Lucci said, you could buy weeklies, monthlies, stock. You could throw a dart and make money.
Yep.
Okay, but they're not always the case. So let's go and look at a couple other things here.
All right. All right. Yeah, let's move over to. Actually, you know what? Let's do win last. Let's give them an illiquid one. Let's give them an illiquid one.
Okay, let's go with. Let me pull this up here. We had a couple. Let me get NCLH. Hang on, because that was one that was really aggressive. But again, and this is Norwegian Cruise Lines, I think. So, and the cruise lines.
I didn't even know this name existed until Jesus put it up there.
And this is the thing, Lucci. Say, everybody loves to trade Facebook, Netflix, and Apple, but every day they're not steaming in those particular names.
Yep.
And there's
we even saw that this past week. They were not going for, barring the dip buys, which were so craftily bought, on Netflix and Win and a couple other names. Barring those dip buys, they weren't going for the high flyers. They weren't going for the high flyers at all. They came for some of these mid-tier names that I haven't even freaking heard of. So when Jesus throws them out there, half of them, like, I wouldn't even pull up. But the ones that I do, these things move. They've been moving. They have been moving.
I had, and again, I'm being honest, I had a better day on Friday, or Friday's action, which everybody I spoke to, every trade I know, considered it the most dead day they ever seen in their life.
Yeah, completely.
Okay. But again, if you go look in the steam room, bullish orders in names, again, not the Apples. Look at this, Facebook, but Norwegian, Schwab, CRM. These were all names that were definitely tradable, and you could have made money with. Right. So let's look at those examples so you could get an idea. All right, and I don't want to get lost. Take out a little windows here. All right, Norwegian Cruise Line, and NCLH is the ticker, and we see, as I stated here, an aggressive sweeper come in. All right, sweep the offer and buy 2387, so almost 2,400 contracts of the March 45 calls, and pays a decent amount of 520. Okay, and the order came in at 125, as you can see here. This is on Friday.
Right.
So immediately, again, my mindset is, all right, this obviously is an unusual trade because it's not a name that you'll see these type of orders in, so it's considered unusual. But the size, the aggressiveness, March, so he went front month there. He didn't go too far out. So immediately this tells me that there's a good probability of momentum coming in over the very short term in this name. Now, even if I was trading options, I probably don't even pull up the option chain on this thing. Okay, just, off the top of my head, logically, I mean, like Lucci said, people don't even know this name exists. But Lucci happened to pull it up and took a look here, and you could get an idea. And Lucci, you might want to speak a little bit about what you saw here.
Yeah. Charles here has got a question. How do we know if somebody's buying or selling? So we'll get to that question too at the end of the webinar. So Charles, make sure you repop that question at the end of the webinar so we can get it. Guys, if you take a look at this photo here, that's the chart on the right of your actual of the day's action. Okay. Now, you guys tell me what looks completely different when you're looking at let's say a Netflix option to an option like NCLH. Notice that there's no transactions. There's none except that big ass buyer who bought 2,000 contracts at 520. Look at the rest of the action. There's nothing. There's nobody trading this option. There's not a freaking person in the world trading this option. Now, look on the left, right? Look on the left. You'll see the option chain for that particular option, all right? And it actually is blocking out some of the strikes. I could have done a better job on this picture, but if you look at the open interest right there, the one that says bid 510, bid 560, that's the option that we're looking at. That's the 45 call, and the next one after that, that's the 50 call. So notice those have most of the open interest. But the point is that there's no activity. There's no activity in these things. Spreads are generally pretty wide. And zoom back out here real quick for me, Jesus. And take a look at so we can't so the strike prices are every 5 points. And it's looked like I cut that off too. But every single strike here is a 5-point difference. Okay, so that means you can't buy a 46 call, you can't buy a 47 call, you can't buy a 48 call, you can't buy a 49 call. Okay, most liquid stocks, like let's take a look at, for example, like if you talk about like a Las Vegas Sands, which is a $40 stock, there's going to be strikes every 50 cents on that thing. If you look at Microsoft, if you look at Intel, if you look at names like this, there's a strike every 50 cents because the options are so liquid. The stock is so liquid. There's activity all over the place. When you look at this option, you got nothing. You got nothing to tail. There's no weeklies on this thing. This is when trading an option gets much, much more difficult. Why? Because you got to deal with wide spreads. Number two, you got to deal with complete illiquidity. So that means even if you pay up for these options, so let's say you tailed this guy, and let's say you bought 530, or let's say you bought 540, right? You can't sell, you can't find a seller now for anything over 510. You might be able to limit in between and get a fill, but guess what? When you try to come out of these options and there's nobody there to fill you and the market maker doesn't want to mess with you, guess what? You're going to have to take a shit fill on the bid, which, you might not want to do. And that creates the hesitancy, and that creates a lot of other problems, when you're trading out there. Stuff that you're not going to want to deal with, and it increases emotions and all this kind of stuff, where you might just want to sidestep playing that particular option.
Yeah, and Lucci, just to make a point, like, for example, when I was swinging off Wiseguy action a couple years ago, there would be times I would tail this type of order and play the option. The only difference was I wasn't looking to day trade that option. The order was significant enough for me to swing the name,
right,
and I would stick with the option that player actually hit up, okay? And I obviously would have to take into account, like Lucci said, if that thing doesn't see an increase in price or in volume, there's a good chance I'm going to get robbed when I want to get out of it.
Exactly.
So these are all things you have to take into account. Again, if you like the stock and you like the order, there's no problem playing the option. I mean, this guy did it.
Yep.
So you just have to have the right state of mind and understand that if you're going to tail this order, what does that incur? You're going to have to swing, okay, which means you're going to have to hold overnight, probably for at least a week or two, okay? And if there are no buyers or no volume in that particular option, you're going to get robbed on the bid price. So, again, these are all things we talk about in the room instantaneously as these orders come in. But just to give you, a couple different ways, me personally, I played the stock, okay? And because I'm day trading. And that allows me the liquidity to get in with the type of size and, to be able to get out. And as you can see here, on 130, stock took a nice spike when that order hit. Obviously, it caught the attention of market makers and everybody else who was brought attention to the order. And you can see here, I mean, even if you paid up to $49.40, this thing in a straight line went to $50. Okay? And you're talking about in probably over a 30-minute time span. Okay, so that's 60 cents and with very minimal risk, and that's what I'm looking for. But again, I'm looking to take this profit here. Okay, I'm not looking to swing this name. I'm not looking to give it, till March expiration. I'm looking to take advantage of the momentum that's created off this aggressive order.
Right.
And that's exactly what we saw there.
Right, and we can see, I mean, you can easily see here that the initial steam created a great equity style day trade. Now, if you were looking at this particular name to day trade the option on, you need to be able to look at what we just showed you and be like, yeah, screw that. I'm not going to play for a day trade here because that ain't what this guy is doing. And the options are not liquid enough for me to make that kind of cash on the option for this particular stock. All right, so that's what we want you to be able to do. As soon as you see as soon as you see that steam hit the tape, you pull up the name, you take a look at the chain, and you're like, meh, this is not good for an option day trade. You need to be able to do that quickly so you don't get stuck messing around with shit names like this on an option that is not going to move intraday for you. That's more of a swing, and that's actually a perfect segue to one of our other swing names here, which is Win, which Jesus and I have been tailing every single day since it rallied from $62 to where the hell is it right now? 82 right now with in a week. This is an excellent name to take a look at for several different types of trades, which could have been done on an intraday basis as well as a swing basis. So let's check out Win. We'll do a couple other names, and then we'll roll into Q&A.
Yeah, and here I have the order. I can't find. I must have clicked out somewhere here. I X'd out Lucci, the option volume that you should. But let me go over the order itself here. This came in literally holding hands with that Netflix order. Could have been the same player, could have been the same syndicate, who knows? But these two orders basically called the bottom of that day, which was Thursday, the 24th, okay? And there were several orders that came in, but this was the initial order on Win. Here we see bullish Wiseguy action, April 80 calls, $1 million bet plus, all right, he's opening a new position. The stock is trading at $75.69 at the time. And then you can see immediately after that alert came out, I posted Win. That was a size April buyer there, 2,500 April 80 calls for 420. So you don't need to be, a genius to know instantaneously. That's a sharp bet right there. Okay, he went out to April, not that far. $1 million plus bet ended up being, I think, north of $3 million when it was all said and done. All right, and basically came in at the lows here, guys. I mean, when everybody was looking to get out of this market, this guy just came in and put $3 million plus behind April call.
I was actually, by the way, I was actually short equity on this thing. I was actually selling calls on this thing because it ramped, it ramped so much real quickly. It hit like 78, 79. Finally, you get a pullback day, just like on that Netflix. This was the same time And then boom, I saw this size come in, and in my head I'm like, this guy's a fucking genius. This guy is, but not in a sense he's genius as far as the idea. I was like, I was looking at the thing like any dip here, looks solid for a move over 80. This guy just put his money where his mouth is and put a lot of cash to work. And as you can see, caught the low here, just like the Netflix. Jesus, do you have the option thing that I threw out there?
Yeah, I can. Let me just hold on. It'll take me 2 seconds just to get it
Yeah,
here.
yeah, yeah. Pull that up. Pull that up. So I sent. I got a little pic here of some win calls. So again, just came in just at the right time. And purchased a large amount of 80 calls here for win that could have been tailed in a lot of different ways. They could have been tailed in a lot of different ways. One in particular, as you can see here, this is the 80 call, and you can see what happened. This guy comes in and buys thousands here of this contract. And look at the sell. Look at the sell, which happened on Friday. The sell was around 780, 770. And you're talking about millions of dollars here on a swing, which the guy spent a couple of days in, smoking trade, and that's even out to April. That's an April option. So could there have been equity dip trades? Could there have been weekly dip trades? And remember, win too, the strike prices are every single point. It's a very liquid name. You can play the equity, you can play the option. There's a lot of different ways that you can go about this, just like the Netflix. Whether you want to just tail the steam that actually hits. There was also some 84 call buyers as well that added some more steam to the actual trade. So this win was amazing, absolutely amazing.
And yeah, and exactly what you ended on. This was just like the Netflix where it met all parameters as far as whether you wanted to trade stock, you wanted to tail April's, weeklies, monthlies. It just, every checklist that goes off in my head, it met. And again, when they come around, that's why if you're disciplined enough to just wait for these type of situations, it's worth your while. But like Lucci mentions a lot of time, we're all degenerates and need to play. Yep. And, so like a day like Friday where, for me, I'm day trading common was a fantastic day. Everybody was waiting for Facebook, win, Netflix activity because we've seen it the last 2 days. It just never came. So, a day where people with day trading the common made money, people were waiting on further action in these names, and it just never came.
Indeed,
so,
indeed.
And we don't even know here, Lucci, this could be a seller. We'll know Monday morning with open interest. We don't know, but they tattooed a ton of strikes that day. Yep. That particular day. So the guy obviously hit it out of the park in that trade.
Absolutely. Bob's got a question here. He wants some specifics. I can hear it. I can hear it in your voice. We'll get to you in the Q&A. Make sure we do get to you. Let's throw out one more example of like an illiquid name here, Jesus, and then we'll roll into Q&A. What else you got over there, buddy?
All right. Here's one that a lot of us in the room traded the common. Again, UTX, I'm not too familiar with the option, but it just based on the order itself, I wouldn't take the option for a swing regardless. But here we saw bullish Wiseguy action, April 100 calls, so not too far out, a $150,000 bet, which is not huge, but for this name is legitimate. And it came in 11:17 a.m. on the 25th of February, 95.48. So again, UTX is not in that win, Netflix, Facebook, Apple category where you should be day trading the option. And we mentioned that in the room. If you're going to look to tail this order, try to stick with the common. Or if you want to stick with options, make sure you're going according to your game plan. Just don't base it off this one order. And then, again, this is just a perfect example of how the Wiseguy action just creates instant momentum in these names. And you could see here the stock was strong to begin with, came in with the April order, and that's all she wrote, as this thing had a huge run in a short amount of time from 95 to a high of 98.50.
Yeah, this one is also in the news too, so it's one of those news names. I'm going to actually do you guys a favor here. I'm going to share my screen here, and I'm going to go ahead and show you the option chain on the UTX, for Friday. And UTX was a name that that definitely was thrown around a lot recently in the steam room after news about, I believe it was Honeywell, right, Jesus? It was some kind of buyout or
Yes.
something like that.
Yep.
Right.
Honeywell.
So there was all this kind of activity over the past couple of days, off off this huge kind of move that we saw here, and that's where most of the action kind of stemmed from. But now, if you guys come here and take a look at the option chain, like you notice, number one, there are weeklies. I mean, that's one to immediately notice too on a name. It's like, are there weeklies? If there are weeklies, definitely right off the bat, they are more liquid than names without weekly. So, for example, that NLCH, that Norwegian, whatever the hell it was that Jesus was talking about earlier, that thing does not have weeklies. So immediately, if it doesn't have weeklies, there's not a lot of liquidity. Now, even if it does, that doesn't mean that you're still okay here. UTX is a name that trades very quickly. Notice the spreads. Now, granted, these are off the close, but your spreads are pretty wild here too. Okay, so if we actually pull up, let's say one of these weeklies, I don't know, well, let's just pull up one of these 97s. Where did the stock close at? It closed at around 97, but it ran to $100. So let's take a look at what this thing looked like for the day. So notice this is Friday's activity. There's nobody doing anything on this thing, and this was an option that was in the money and ended up at the money. So this should have been an option that was traded pretty aggressively, on Friday, and didn't really trade at all. Okay. So again, where's the liquidity? You want to stick with options that are really trading aggressively. Maybe the monthlies were better off here. Let's take a look at maybe one of the monthlies here, and let's see if there was more activity on this one. So this was a monthly one that they probably messed around. And notice again, nothing. So even though this is a stock that's in play, there's freaking news on it, you're still not getting the liquidity that you need in the option in order to play for intraday trades. Plus, you got a spread that is so wide here that guess what? If you're let's say in advance or starting out as a trader, you don't know what to do when you're faced with a spread like this. And raise your hands or talk to us about it. Like, how many of you guys actually know what to do when you have a 50-cent to $1 spread? Do you know what to do? Do you know what the best practices are? Do you know how to lean in between and try to find out where, you might be able to get a fill? Do you? And if you don't, what the fuck are you doing trading these things? So again, don't feel like all of a sudden when that steam comes out that you have to trade it. Sorry to cut you off, Jesus. What were you saying?
No. I thought you were done. I'll raise my hand right here. I'm not embarrassed. This is one of the issues that I had when I came to the conclusion that the true edge was day trading these things. This was my biggest problem, and now why I shy away from options, especially in these names. What happens is I see an order like that, and automatically it's about me getting filled and being quick, getting in before that run. And I would see these spreads in the option, like you mentioned, and me, the degenerate, I would take out the offer and automatically be down in these things.
Right.
And even a lot of times the stock would appreciate, but the bid barely moved. So
Right.
I couldn't even sell this thing for a profit. So these are all things that I experience, guys. You're not the only ones out there who don't. Options is a complex game. It's a tough game.
Right.
And if you don't know what you're doing, you can lose a lot of money doing it.
Right.
So,
and even if you're right, and the worst part about it, Jesus just hit on that point, even if you're right on your idea, even if this freaking, this thing goes to 100 on the date, if you cross a spread and pay the offer, which is what Jesus was saying, like most retail will do, guess what? Even if the thing moves higher, this bid might not cross back. This bid might not get up there to 330 or 340, or at least something that you can visibly see, unless you understand how to trade these things and how to mess around with the market maker and how to limit in between and around it and all kinds of different sides, juice it with a couple of contracts here, there, lean out on some offers, see if you get picked off by some random chump who is trying to just pay up for it. If you don't know how to do this shit, what are you doing? What are you doing? Stick to the names that are liquid, aka the Netflix, if you can catch a SPY order, if you can catch Apple, some of these names here that are much more liquid where you don't have to deal with crazy spreads. There's enough momentum, there's enough juice, there's enough people playing in the option that you can freaking sell to. If there's nobody there that you can sell to besides the market maker, guess what? The market maker is not going to give you the price that you want. He ain't going to give you the price that you want. All right. So that's what we're trying to convey here. That is definitely what we're trying to convey here. All right, guys. So let's rotate into some Q&A stuff. I know we already have a lot of questions, guys. If you want to repop some of your questions out there, Jesus and I will take them. Do want to say that the promo for you guys, I sent you all the link here, and you can see the link here on your screen. This will go ahead and get you a first month of just $49, where you can test us out, test some of the steam that hits the private Twitter, as well as in the chat room. The real value, I think, and I think Jesus would agree, is in the chat room, because it's a place where you won't just get the steam from, let's say, the private Twitter. You'll get the color too, and the color is worth a good amount. Wouldn't you agree there, Jesus?
Lucci, I can't, I don't want to come across as a salesman. Obviously, we all have to be salesmen, but the most important thing is the commentary and the analysis. And, guys, I've been in this game 20 plus years now, so this is not something I learned overnight. And even though I can try to teach it with these webinars, it's not a snap of a finger thing. This is based on experience and feel for this type of action, and I've been doing it long enough. So I stress, even in the chat room, the commentary is more important than the actual order itself. So it's if you can get in that chat room, it's a big difference when it comes to this stuff.
Nice. All right, so let's take some questions here. Monique Chung is saying after the first month. So after the first month, guys, you will get rebilled at $199 per month, which is still a discount from the current $225 subscription rate for anybody that's just coming in on the website. But again, we want you to test it out. We want you to see how the flow can change your trading, can cut down on some of the over trading that you might be doing. This way you can just stick to some of the names that you're going to see some edge in. So let's take some questions. There's a ton of questions here. We got Bill McKisson here for FedEx from Friday, so we'll throw that one in there a little bit later here. Joe is saying the chat room has cut my learning curve significantly. Let's see. Lewis wants to know, Wall Street Jesus, so you've mentioned that you only day trade. Can you elaborate on why? Can you just give them a quick spiel, man? I know you love this question.
Yeah, and I'm a swing trader by heart. I was a broker. I managed client money. I wasn't allowed to day trade, so I would take positions. So I wasn't always a day trader. But 2 quick points. One, the edge in all of this is off day trading. Whether you're swing trading or not, it's off what happens that day. And what I mean by that, the type of action I am focusing on and looking for, like I mentioned earlier in this webinar, is based on activity that's going to show results now, not 2 days from now, 3 days from now. Something is happening now, okay? And that's the activity only that I'm focusing on. So you will see a lot of these names, not all of them obviously, but a lot of these names, as we like to call it, dance, not too long after these orders hit the tape. Okay, and there's a reason for it, and we could do a whole other webinar behind that. But that's the first point I want to make. That's where the true edge is in these things, in that initial pop within the first, I would say, hour.
AKA, guys, and the thing that you want to take away is that it's easiest. It is easiest, and there's the most edge off that initial move. Now, everything after that, you're essentially guessing, or you essentially need some kind of other analysis to see if there's going to be some follow through. That win and that Netflix, we were still in a bull market. They caught a great dip, and that's all that happened. That is all that happened, and that turned out to be a great 2-3 day swing. Now, most of the steam, though, the real edge, the quick edge, the easy edge, the less stressful edge is, guess what? That first freaking hour.
Yeah, and listen, you don't have to take my word or Lucci's word for it. If you're in the chat room, okay, private Twitter or whatever the case, or even see my tweets on Twitter, even though they're not all in real time, but every symbol that I spit out of my mouth that has the word aggressive or sharp sweeper behind it, 8 out of 10 of them, you will see some sort of reaction. Okay, so again, there's facts behind this, and I strictly focused on day trading because of that point one, but two, it was the market, I think, on top of everything. I wasn't seeing that follow through that I was seeing when we were trending. Okay, and this is going on almost 2 years now, I think, where I just called it quits on swing trading. I would see that initial pop that day, and then the next day, everything would just fade. You know, breakouts weren't working. I mean, the term breakout's a dinosaur right now in this market. So, you know, those are the two main reasons. But the number one reason that you guys should focus on is that's where the true edge and the most important thing, the least amount of risk lies. Because what's going to happen? Okay, I bought Netflix and Win into the sell-off on Thursday. I have my stops in place where I know, listen, the action is not going to there's no momentum coming in off that order. So I'm out. All right, so I have my stop loss in place. I'm riding the thing higher over the short term. Where's the risk? All right, you can see obviously the reward definitely outnumbers the risk. Now, if I hold this thing overnight and China blows up or oil's down 4, what happens to Win that following morning?
Yep.
Good night, Irene. Okay? Your option goes to zero problem if you bought weeklies.
Yep.
So that's the thing, guys, that I stress to all my members. You have to focus on your risk, okay? Then you will see the money and the consistency will come. The risk is the most important thing because you can step on a lot of winners and blow yourself up on just one loser, and that's the name of the game.
All right. So that was a pretty intense answer there for most of you guys who are wondering why Jesus just trades the stock. There's so many questions here coming in. I'm noticing a lot of these questions. They want specifics on, entries and exits. If you tail them with weeklies, when should you sell? How do you know what expiration? And again, this is some of the things that we're throwing out in this webinar. But again, like people still want that specific, like, what do I do? Should I go this much delta out, this much delta? And again, this is not, we don't try to say, hey, this is exactly what option that you should trade. This is exactly how far you need to go out. It doesn't work like that. It doesn't work like that. There's a lot of feel. There's a lot of understanding that you need to, have that comes along with the experience. Which is why the Steam Room is a great place. But let's give them a little bit of taste here. I think Bob here had the first question about, let's talk specifics. How much do you let these trades breathe if taking stock? And then I'll go ahead and do if you were taking a weekly here, because we have a lot of questions on actual entries and exits. So, Jesus, can you give us an example here on specifics about when you do take a stock, what kind of stops do you use? What's your general profit target, things like that?
Yeah, and that's specifics in this market. It doesn't work, guys. Okay, even for this question here, it's impossible to give specifics because there's so much that goes around it.
Right.
And I'll give a perfect example. Okay, let's take Win, Lucci, if you could pull up Win that day.
Sure, I got it.
Okay, all right, and that's another point, and again, a whole other webinar we could go into. I'm not shorting at all, and Lucci knows that. I don't short. I'm not tailing any put action.
Right.
I'm just focusing on longs, especially into weakness. And Win and Netflix were the epitome of what I focus on.
Right.
We got that morning sell-off, okay? Those orders came in on Win. There wasn't a huge spike in Win share price off that order, okay? Because It's Win, it's a liquid name, and the market was selling off. So there was some selling pressure there.
Yep.
So I go into the market right around there, and that's where, not to jump around, but you can use the reference price off the alert, okay? It tells you where the stock was when that order took place.
Right.
Okay, so that's a good way to get a gauge on how much you're overpaying in the name and so forth. All right, so Win had basically very little reaction. I went in, I bought a couple thousand shares of Win,
Yep.
all right, and then as far as stop loss is concerned, again, if it's a volatile day, I use the term I stay looser. In other words, I don't want to get stopped out from an algo for no reason if the market's volatile and weak.
Right.
So I try to use my judgment there, but I know, okay, and you can see off Win there. If that Win consolidated there and started a leg lower, I'm out.
Right.
There's no reason. I don't care if Win comes back and rallies 10 points 3 hours later.
Right.
I need to see a reaction now. And when I be my now is probably within the next 10 to 15 minutes.
Right.
Okay, if I see a negative reaction, either my analysis was wrong, it wasn't a directional bet from that player, or whatever other reason it may be. But it's telling me it's wrong and I'm out. Okay? But again, my downside is always limited. I don't fall in love with these things. And when I see the reaction going in my favor, what I like to do, and I don't stick with it as much as I should, if I like the name like Win in particular into weakness, I'll raise my stop as it goes higher. So immediately we saw that pop. After a little consolidation and Win, we saw a pop. I'll raise my stop to break even. And now I say to myself, all right, now it's all gravy. If this thing falls apart, the market falls apart, I get out break even, no harm done. If not, the thing trends higher and I make some money. So there's a lot, there's a variety of things that go into it, but generally I'm not giving too much leash to the downside. If I'm wrong, I'm wrong.
Okay. All right. So let me flip and show you guys a little bit about, let's say, if you were in an option, right? Let's say if you're in an option, what are the things that, you really want to do, to protect your downside, figure out, okay, where's your actual stop. Now, I'm going to just throw out a trade that I made on Friday here. I traded this LinkedIn simply because it was one of the more bullish names out of those high betas, was holding, I was sitting here just watching it just kind of hold 120, and I was like, okay, if the market kind of leans up, and remember, this was around like 12 o'clock here, so, markets were pretty just kind of dry, but we did kind of lean up. We did kind of lean up into the sort of afternoon here, and during this period, I figured there was going to be some more upside here, but LinkedIn looked okay, to trail higher. So what did I do? I found an option that was kind of close to the money, and again, like, we're just going to have to use the marches here, but I was actually in a weekly just for that particular week, and I stayed kind of in the money, right? So I stayed here with, let's say this 118 call, which was trading at around like $2 at the time, and I was just trying to sit there and just get a fill for that, for that particular time. So you're just seeing this kind of activity here, this kind of just stale activity, and then finally, and again, you can't really see it here. Let's see if this 120 is a little bit better. Yeah, so this one looks a little bit better. So, you notice you get your consolidation here. I'll sit here in between this because I'm expecting this thing to come out on the upside. Now, just like Jesus said, if there's any rotation, for me, if there's any inkling that, LinkedIn is not going to hold this 120, then I'm getting the hell out of this thing. So for me, if I take a $2 option or a $1 option, my stop is usually 25%. That's all I'm willing to take. And then if my bid dumps 25%, chances are I'm wrong on my entry, and I need to get a better price. So I'll just bail and then just look back at it again. So if this option dumped to, let's say, 240, I bail here and try again later, or just forget the trade altogether. So the point is, though, and whether you're trading the weekly or whether you're trading the stock, Jesus already mentioned, is that there's no sense. Once you're wrong on that immediate move, guess what? Now you're kind of hoping. You're more or less hoping. Maybe it'll happen later on in the day, and maybe it won't. And what are you going to have to sit through in order for that to happen? Like, you're sitting in a kind of a weak market here. where spies are just kind of trailing down and you're long something. So if you have just a weak kind of situation, guess what? You're not going to get much follow through, and even if you do, chances are it's going to come off pretty quickly. So it's not just it's kind of a timing thing. It's kind of a feel thing. But if you choose to take weeklies off of Steam, just like Netflix or Win, it's a very similar trade. If it doesn't immediately pop in your direction, you might have to look at a better entry, cheaper entry, and book a loss quick before you end up sitting in an option that is going to go to fucking zero with or without your goofy ass. You know what I mean? So, these are definitely something that you do have to keep in mind. There are so many questions here, Jesus. Let's try to run through a couple with some quick answers here, and then we'll call it a day. Remember, again, guys, the promo here that we're throwing out for you guys. If you just throw this link in your browser here, you will get access to $49 for the first month, and then rolling subscriptions after for $199 a month. And this promo is only for you guys right now. So anybody that is registered to these webinars, you are the only people that get access to this this particular discount. All right, so let's try to roll through some quick questions here. We got Rob Flowers here is saying, does your proprietary algo indicators cover all smart money action across all sectors? And how does it determine which ones are most impressive out of the whole? And we've gotten a lot of these questions. People want to know, what is the actual screening for these things? And Jesus, why don't you go ahead and just give them a quick rundown of you track for the aggressive type of action that's going to yield, quick follow through.
Yeah, and I get this question a lot, especially on Twitter. People like to bring to my attention, oh, you didn't see these calls and that volume?
Yeah, a lot.
I don't care is the honest answer. There's so much activity out there. There are people buying and selling calls, puts all day long. I'm focusing on one specific behavior, and that's it. A lot of times, especially in the chat room, I'll mention other activity that's taking place, okay, especially if it's significant, but my main focus is on aggressive behavior, primarily sweeps, which are the epitome of aggressive behavior, only because, again, it stresses urgency and gives the potential for instant momentum. And that's where, again, the huge edge lies in this market. Okay, so that's where I can determine whether I'm right or wrong in the immediate short term. Okay. So again, it's only looking for aggressive behavior is the answer to your question.
Okay, let's take a couple more here. We got Ethan here with a pretty cool question. I notice sometimes the alerts will mention a route or a specific exchange, just as such as PhilX or ICE. What's relevant about what exchange it's going to? Is it just extra information? You guys are very thorough. It's much appreciated. Thank you for the comment there, Ethan. Is there any added info that you get when let's say an order hits a particular exchange versus sweeping, every single exchange?
Yeah, and that's basically why we have it on there. It's only because it gives you the opportunity, unlike many other formats out there, to see the actual sweep order, legitimate sweeps. All right, so when you see multi-sweep, that means that player swept multiple exchanges. Didn't just go and hit one exchange. He wanted it so bad he swept multiple exchanges to get a fill on that order.
Right.
So that's why we put it in the details as far as the alerts are concerned.
Yeah, and I'll go a little bit further there, Ethan, too. Like structurally, in the markets, like there's so many people that have better relationships with a particular route than they do others. So oftentimes, if they're able to get a competitive rate through Philly or through ICE or through SIBO or through whatever, there's so many rules, structural rules about fees that most retail traders have no clue that it's ever happening. Like most retail has no idea what the hell ICE is or SIBO is or any of this shit. They don't know if it's a customer route versus a market maker route or a dark pool route or whatever. So once you get into that dark world, like that world, that's a rabbit hole, bro, that never ends, man. Just so you know, it never fucking ends. So there are so many relationships on the back end that a large trader might have with a particular exchange that he gets a good discount with, as far as commissions or as far as fees. So you know that's also something to take into consideration too. Let's get a question here on swing. There's a lot of people here that are asking, how do they effectively use the Twitter feed, because they're more of swing traders. They're not in front of the PC. We got Joe Harrington, a couple other people asking the same question. How can I use it effectively in my trading versus being in the actual Steam room? So just using the private Twitter feed, not at the computer all the time, more of a swing trader. You know, what are some tips here to use that effectively?
Okay, and I'll make two very simple and important points. There's two effective ways. We did a little write-up. I'll shoot it out on Twitter later today as well, so you guys could take a peek of, you know, the different ways you can utilize this information. But in regards to swing trading itself, there are two simple and efficient ways. One, if you have the time in the day to be in front of the alerts, that instant cushion, that momentum that these orders provide is just, I mean, is an edge in itself for swing trading.
Right.
If you're in win, okay, and you see that order come across and you like win, okay, you were looking to take a position, and you see some player out there comes in and is throwing $3 million worth of orders out there, that obviously will give you the little kick in the ass to go in and make that trade. So now you get a win on a sell-off at a great level and have that cushion from the momentum that's generated off that order throughout the day. So again, that cushion is a nice cushion to have, whether you're swing trading, day trading, position trading, whatever it may be. A cushion is always nice. Okay, a lot of times, I mean, how many of us have taken positions and they go south, I mean, as soon as we buy them? You know, so there's a true advantage in itself. And another one is, if you're not in front of the screen every day, like you mentioned, and you can't really time these things, I would say to focus on repeat buying, okay? And what I mean by that very simply is, when you see orders coming in on a specific name, and it's not just at one particular time in the day, you know, over the course of a couple of days.
Yeah.
I mean, those have been my strongest swing winners throughout my career, are names that have caught repeat buying over the course of, let's say, a couple of days to a week.
Yeah.
And if you don't have the time, I would focus on primarily, you know, that specific type of buying, if you're, you know, lapse that time there.
Yeah, Joe, I would say, Joe, and I'm just adding on to you know, what Jesus is throwing out there. It's a tougher game, you know, when you're trying to swing, especially in this environment, man. You know, these swings don't last that long, you know, especially the dip buys out here. Some of the short trades, once the market turns, like that's where the real juice is going to be, I think, in the next few months. If you're able to catch a turn, you know, for a short trade, for example, like I shorted swing on this Expedia maybe like a week ago after the earnings call, once it got back over 110. You know, so this thing just shot right back over 110, 112, and I was able to catch a swing short, you know, right up here over 110. You know, this is kind of what you want to look for. You know, if you're going to swing short in this particular environment, this is where you might get a little bit more follow through. The problem is on the dip side, on the downside, is what you have to deal with while you're sitting in those swing trades. So your risk tolerance has to be more in this particular environment just to sit in some of these things overnight. I mean, Netflix hit 96 off that first buy run and then pulled back all the way to 87 and gave you another huge entry here. So what are you going to do? Let's say you swung the low here. You know, what are you going to do? You're going to continue to hold this thing up to $100. You're going to lose half of your premium, if not all of it, depending on your expiration. So there's so many other different things that you're going to have to deal with as a swing trader, especially if you're going to add in options too. So I would recommend, again, like, narrow down your list, narrow down everything to what Jesus was saying. Track some of the names that have really been tattooed with activity, that are have changed in sentiment, or are strong. Have a clear sentiment where you can come in, grab a dip, and sit in it for a while, like the Win, like the Netflix, like the Spy. Recently. But again, anybody who's swinging right now, you really got to, number one, have some knowledge and understand what exactly the strategy is that you're going for, what criteria that you want to pass through once you actually make a trade, and cutting out a lot of the bullshit trades that you make, trying to swing every name out there that is not going to follow through in this particular environment. So swinging
Yep.
right now has really destroyed, I would say, a lot of people. And again, swinging is where the real money is at. The problem is that, do you have the know-how? Do you have the capital? And do you have the time? Most retail, guess what? They don't have capital and they ain't got the fucking time. So, if you're already shooting yourself in the foot there, don't try to don't try to, I guess, what is the term? Don't try to,
Bite off more than you could chew.
there you go, there you go.
Yeah, and then no, Lucci, just very quickly, you made two great points there. One, another thing you could mention that you mentioned to Joe that's a significant point: turning points.
Yeah.
If you want to swing,
Oh, those are the greatest places. That's where you're going to get paid. That's where you're going to get paid. You got to time those reversals, though, Joe. You know what I mean? Like, you got to be able to time those things, and the private Twitter feed will help you do that. But you need to be able to watch the market and understand where those turning. You got to be able to feel it. If you can't feel it and you don't have the time to sit there and feel it, you might be in late to the party. And if you're in late to the party, you already know you're paying up way too much for those options. But the reversals, that's where the money is. That's where the cash
yep,
is.
yep, exactly.
All right, guys. All right, so let's kill the let's kill this for now, guys. We have some great questions here today. A lot of great activity. Again, use this link that you're seeing right now, wallstreetjesus.com /Saturday dash sweep. Tim Rossi has different guys question the Jew versus Jesus. No, the Jesus is not Jew. He is not a Jew. He is Italian and Greek, correct?
Great. Yep.
Yeah. So yeah, those are different guys. There's a guy named Kenny Glick on Twitter. You can follow him at Hit the Bid Radio. He's absolutely hilarious. And he is quite the Jew. He is quite a Jew. And yes, I am the brown guy. All right. So again, the link Wall Street Jesus / Saturday dash sweep. And this will get you a nice discount just to come check us out for a month, $49 here. And again, we can help you in the steam room, craft your trading, cut out some of the over trading that you might be doing, cut out some of the aggressive swing trading that you might be doing that is not yielding in profits. Even though you have the right ideas, you guys might be falling at the wayside from entries and exits and things like that. So there's a lot of things that the steam room can help you with. So that's it, guys. That's it. Thanks for coming through, and we will go ahead and record. Actually, post this recording up. You guys will get an email about where to access it. Thanks, Jesus, for coming by, and we'll keep doing these things for Saturday. So we'll see you next Saturday.
Yep. I love it. Have a great weekend, everybody.